Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Monday, February 1st, 2021. It is 3:11 p.m. as I'm starting the video, so just about 50 minutes left to go before the close. I wanted to do this so I could get out before then. The theme of this one will be, I don't know, let's say, will the real whipsaw raise its hand? All right, so if you recall, last Wednesday, the SPY broke down as clearly below trend. I'm referring to the primary trend lines on the daily chart off the March lows. And then on Friday, we had a pretty solid red close, convincing candle, impulsive, decent, nice volume too. And so that gave us a sell signal. Now we're back slightly above, but not far above the trend line, but as of right now, above the trend line at as you can see here. I zoom in. And so where we go from here, we have a little under 50 minutes left in the trading day. We'll determine whether QQQ regains this level and continues to rally on, and if so, this will be the whipsaw. Or is this the whipsaw? I'm leaning this way. I think this is an intraday whipsaw. Intraday meaning we're above there now, and if we close back down on, within relative close proximity or especially below that trend line, then it's an intraday whipsaw. Intraday gain that level, but then failed to close above it at the 4 p.m. candle. But of course, I'll wait and see. Like I said before, like I said last week, heading into the weekend, no reason to get aggressively short, or if you're long, abandon all longs. Yet we still had a lot of things hit support where the buyers, quote unquote, should have stepped in, such as Apple on the trend line that I showed you, the energy sector, XLE back testing primary trend line, and quite a few other things there. So again, little more work to be done to help firm up the case for a swing short, and that would be a break. One of the simple things would be a break of Friday's lows, but it would also help to see us close back down on or below this trend line today. And if we got a late session dump and somehow turn this candle red, even if we didn't take out yesterday's candle, well, that would be certainly a check mark. And again, safe bet is wait for Friday's lows to get taken out on the Qs. And even, of course, it would help to see it on SPY as well. So let's talk now about, let's just do the rest of the video because I already covered this earlier today. That's something to watch for there. Let's talk on the euro. I can't, in the US dollar. I continue to impress the importance of the U.S. dollar, and I think it's something that I'm assuming a big part of the Reddit crowd doesn't realize. They're known now lately for pumping up a lot of low-quality stocks. That's why we have a big run in the IWM today. I looked at some of the stocks that have gone. They're going parabolic there. A lot of small-cap stocks, lower quality. Those are easier to move. The Reddit crowd is as big as they are. They're not going to move, Apple and Microsoft to any significant degree, at least not anything like those smaller caps stocks with a much larger or smaller float, meaning fewer shares out there. The thinner a stock is, meaning less trading volume, fewer shares, the easier it is to move. And of course, those with a high short interest can be easy to move if you can trigger a short squeeze. So, the Reddit crowd's not the one that figured that out. Short squeezes are as old as the markets are, since you've been able to short a stock, usually initiated by one institution or individual, large investor, hedge fund manager against another that has a large short position, or multiple companies that have a large short position. All right, let's get back to euro. US dollar. I'm going to just recap my long-term view. This is a long-term trend line right here, and this is a resistance. We hit that resistance. I have it at 122, 141. That resistance line, when we hit it, we had negative divergence here on the weekly chart. So as I mentioned before, back here, that was a divergent low. That was bullish. That was a catalyst for this big run up in the euro US dollar pair. Remember, when we're looking at this chart, it's the euro against the dollar. Euro is the biggest component, so it's almost an inverse mirror of the dollar index. So when this is going up, the dollar is going down, and vice versa. So longer term, I remain bullish on the euro, bearish on the dollar. That's because we broke this long-term downtrend line. We had a big divergent low when we did so. and other factors. However, near to intermediate term, I remain bearish. We hit that pretty, I think, very significant support level, and so far it did cause a reaction there. The euro couldn't get through there, has pulled back, and we have now, you can see this bearish rising wedge pattern forming. We have negative divergence, just as positive divergence at the low here was a catalyst for that drop, just as negative divergence, an almost identical pattern. I pointed it back out at the time, back in 2017, late 2017, early 2018. These are the big trends. And so at the very least, if we get a little bit more downside, I'm going to go over all the levels right now. I think that'll be the catalyst to come in for a back test. So this, remain near to intermediate term bearish on the euro, which is bullish on the dollar, near to intermediate term, and then longer term, bullish on the euro, bearish on the dollar. So that would be something along the lines of what I'm looking for here. And again, it's these divergences. There's now a trend line to watch. You go down the 60-minute chart. These are levels I've laid out. I had a target here, and I believe before last time I updated the 60-minute chart for you, at 1:207.46. I added a second. This is now a support zone. I have a line at about 1:205.80 because we've had a couple reactions down through my initial line, and I'm coming in on those reaction lows right there. And we had another reaction low right there. So actually, it's a big level. Let's color code it up, and this is why I'm doing the video. I think when this breaks, if it breaks, and I cannot emphasize that enough. I say this all the time. Support is support until and unless broken. So a case can be made, and this is the whole theme I've been harping on the last few days. I think we're at a pretty important juncture where we're going to go one way or the other. We're going to step in the stock market, and the big FANG stocks are going to hold these support levels, the energy sector and some others, and rally, or they're going to break down. And I'm still leaning to the breakdown camp. And I've told you in recent weeks I've moved away from looking for just the next 5, 6, 7% pullback to a much deeper and potentially a swift drop in the markets should we get those sell signals. So this is one of them, and this is one of the biggest ones. There it is. Look at all these reactions right there. So the euro just needs a little more nudge to the downside, and that should break support and then open the door for a swift drop down. I've covered US dollar. We'll look at US dollar index here, and we'll look at it on the daily chart. There it is. The dollar broke out recently. I've been covering more often the dollar futures, DX, and I know I have it here somewhere. Let me just pull that chart up for you. There it is, DX, getting close, moving up. So here's the thing. So far, I've been right on the call on the dollar. It put in this divergent low, breakout here, back test, and took out the secondary trend line, and then the final trend line took this big 89,939 level out. That was a buy signal. Back tested it, back tested, moving higher, but gradually walking higher. Now almost up to my 91.81 target. And again, it could be one of two things. It could be the final stop. And again, we're close enough now, but if we pop it, take it out with conviction, I think that's going to be quite bullish. I think it'll cause a short covering rally in the dollar and buyers to come in and get a pretty swift rise, and that would almost certainly coincide with a drop in the market and the dollar sensitive assets, which I'm going to cover here in just a second. It's not going to be a long video. It'll be shorter than the other one. So there it is. That's the dollar 60-minute chart. I've also been covering the euro right here on the same thing. This is hourly chart, hourly bars, 60-minute chart here, and big level, this yellow line right here at about 120.68, and same thing. You can see we're just tapping. So similar to the EUR USD 60-minute I just showed you. A lot of reactions there, and that's why I have a zone. It's more of a support zone from where we are up to about 120.91. You can see just a lot of reactions there. So that's it. Keep it simple. Here's the recent trading range, and we're either going to hold support. If we do, this should be bullish for the market and dollar sensitive assets that I'm about to cover, which is gold, silver, crude oil, and of course, again, the stock market's been very, very dollar euro sensitive lately. So I'm going to cover that, and that's the bearish scenario. Break of pretty much right where I'm doing the video. We go much lower. We're going to, especially an impulsive breakdown, it should bring us down to my third target zone here in the euro futures. That's 119.22 down to about 119.52. Okay, and now just to harp again on those correlations, I'm going to show you, we're going to use FXE, which is the ETF for the euro, or ETN, and I'm going to compare it to the stock market, to oil, gold, and silver. And I'm going to use keep it simple, we use the ETF. So SPY is the S&P 500 ETF, and I'm using FXE. I could use the euro US dollar, but those trade round the clock, and you're going to show. So this is FXE, since it's an ETF, will trade at the same market hours on this chart, 9:30 a.m. Eastern time to 4 p.m. So you're getting, direct comparison here. And again, you're looking for the trends, and one's going up, the other's going down, and you also look for periods of divergence. There was a brief period where the euro was going down, SPY was going up, but then the euro played a sharp game of catch up, and the correlation again has returned to very, very tight. Extreme positive correlation. Don't look at the differential or the distance between the two lines. Look at the direction they're moving. Look at where they both major reaction highs and major reaction lows, and you see a very, very clear, unmistakable correlation. And then most recently, as I zoom in, you see a peak right here in the euro. Euro peaked right there and has steadily been moving lower, and as I just showed you, is on very significant support in my opinion. Whereas over that same period of time, from that same point, the stock market has been moving, well, it moved higher, it started to correct, and this is what I've been talking about. I think the correction started here. I think we're in a correction. I'm just waiting for the next sell signals to come or to be confirmed. But you can see for the most part, SPY has ignored that pretty strong drop in the euro so far, and one or the other is going to happen. That's it. I told you, which way I think it's going to go, but we're either going to defend, the euro will defend support here, and the dollar will get rejected off resistance. Both will reverse, and it'll be the euro playing catch up to the stock market, and the stock market probably go to new highs. Or euro breaks, it'll become clear to all, and in the other forces that are in there that make this relationship happen will start to play out and put pressure on equities. So that's SPY. You can see the same thing on QQQ. There it is, right here, top in the euro, steadily falling since this point here, and actually QQQ is up. It started to correct since then, but it's still moving against the euro right now. And now let's look at some other things I mentioned. USO, I showed you XLE, and the energy sector is right on support. Here's a very strong correlation. And that is because oil around the world is priced in US dollars as it's traded, and you can see the relationship. They rise and fall together. And they both bottom back here, and they've both steadily been moving higher, and one going up on the other. And look at this. This is by far the biggest disparity or divergence between that relationship. Crude, since the euro has peaked in the dollar bottom, remember that's the same thing. Euro peak is a bottom in the dollar, same day, same time. Crude has been moving higher, mostly sideways. I've showed you a crude 60-minute chart, but holding those gains while the euro has fallen. So again, we either bounce here, and that will allow, or potentially allow, crude to extend the rally, maybe break out of this recent trading range, or we break down, and again at that point I think it'll become apparent to all which way the dollar and the euro are going. And then once market participants realize that, that's where you get that pretty swift game of one or the other playing a game of catch up. So if it's going to be crude oil catching up to the euro, it's got a lot of downside catching up to do, again, if the euro breaks out or breaks down and the dollar breaks out. All right, gold. We'll get to silver. I know silver, I'm sure there's a lot of questions about silver today. Here's a relationship of gold. Same thing, same premise. Gold being priced in US dollars. If you're overseas, maybe you're buying gold in euros, but here, this is GLD, the gold ETF. It's priced in US dollars. If you're buying bullion in the US, or coins are priced in US dollars. So it's very simple. When the dollar goes up, it takes fewer dollars to buy an ounce of gold. And when the dollar goes down, it takes more dollars to buy an ounce of gold. So a falling dollar or rising euro is bullish for gold, and a falling euro or rising dollar is bearish for gold. So that's the relationship. It's just so you can see it visually. You can see we're going back here till April last year. I'm on a 60-minute time frame. That's what we're going back that far. And we had a little period of disconnect here where the gold was dropping, but the euro was going up. And again, that should have been bullish for gold, and it was. Gold finally realized, hey, gold got the memo right here. Hey, the euro's strong, euro's rising, the dollar's falling, gold should rally, and it did. But then they both peaked right there. So there are these periods of temporary disconnects between the relationship, and then there's usually a mean reversion. And gold and the euro and dollar have stayed on that, correlation since then. There was just that one period of disconnect. Now, silver, that's another story. Silver, this is the latest headline. Somebody sent me something on Friday, an article, and then I read it that the Reddit bloggers, I'll just refer to that crowd, whatever those, there's other ones out there besides Reddit, other groups, but talking about trying to engineer a short squeeze on silver because they believed that there wasn't enough physical around, so they pumped, buy silver, and it worked. So far today it's worked. Silver stocks are roaring. Silver itself is up, and again, the point is that will only last so long. If the euro continues to fall, remember euro peaked here, silver peaked there, and silver was moving in lockstep. But look at this today, one up, the other down. Here, let me zoom in so you can see. This is what's going on now, and this is. I don't want to use the word unsustainable because it can continue for a while. These disconnects can last for a few days, but I've seen them last for weeks and sometimes months. It is possible the dollar and gold and silver become decoupled, that relationship, but it would be unusual, and it's certainly not been the case for a long time now. There's been this very tight correlation. So that's it, and it all goes back to where I started the video on the levels to watch for the euro. USD is one way to look at it, and that's what I covered earlier. FXE is the euro ETF. You can see it here. You can use UUP as the dollar ETN. I'm sorry, technically it's an ETN, not an ETF. Similar, but just different structure. And Airedale, beautiful trend line, beautiful bullish falling wedge, positive divergence confirming the wedge, breakout, and again been stair-stepping higher. And like I said, we're at resistance. And if we can break that, you can see UUP is probably coming up here to that 2482. And here we'll overlay. What do we want to overlay? Let's overlay the stock market. They're inversely correlated. And the whole reason I was using FXE again is because it flips it down, upside down. It's probably a lot easier for most people to look at a positive correlation where things are moving together than this inverse correlation. But you just look at the peaks, the inflection points where each turned, and you'll see that's in just about every case either concurrently, they came together, or very shortly afterwards. So here again, story is that's where the dollar bottomed, hit an inflection point, and it's been rising. Yet that didn't happen with the stock market. Stock market kept going up along with the dollar. It's starting to get the memo now, and again, today's solid break, above the lows in the euro, I think should do the trick. Breakout in the dollar could bring us up here, and that's why I wanted to cover all these relationships and say that it's not just the stock market. It is those other things that we like to trade: gold, silver, of course the mining stocks. Again, it's no surprise today. Most of the silver miners are exploding today. A lot have given back gains. I think it's an overdone rally for sure. And again, I don't think that the blogging crowd can continue to exert enough pressure. Please realize that silver and gold is a much larger market. There's a lot more out there. It's not GameStop. GameStop was a extremely heavily shorted stock with a relatively low, volume or market cap. We're not talking relative to big, large caps, of course. And so they're not going to do to silver to the same degree, the same percentage gains as what they did to GameStop. And remember, those disconnects that do happen in the market, they create opportunities. So, if silver, which it has, gets too far ahead of itself based on its valuation, they bring this up. What'll happen is you'll see, flood supply will hit the market. Miners and other, those with the silver will we'll sell the silver. It'll correct. Prices will come back to the norm. So there's the recent spike here in silver, and you just don't see it in gold. And so yeah, I think that move in silver is unsustainable. I wouldn't chase it here. I'm just, like I said, being very patient, waiting for confirmation, or the next sell signal or objective time to add to short. So we'll watch that. That'll be a break of the lows on QQQ. It'll also be fade of this rally into the close. And I'm going to wrap the video up now so I can get it out to you guys. If I wait much longer, here's what QQQ looks like on a 1-minute chart, 5-minute chart. And so we need to see them fade the rally. Those are the pre and post market trades in here. And again, we don't have to have a fade of the rally today, as long as QQQ doesn't print a very solid, strong close back above here, big run up into the close, and then follow through with another green candle tomorrow. So that's the $1,000,000 question where I started the video, and we'll leave it here. Was that the whipsaw, aka bear trap? That gave us a false sell signal and we're going to move back up? Or is this a whipsaw here, even if we close above and then continue down? And of course, don't forget, tomorrow after the bell, Alphabet and Amazon report. And so far, the post reporting returns for stocks like Apple, Apple, Facebook, and the other big fangs, it has not been good. Microsoft still holding the breakout, so I got to give it props there. And that's like I said last week. There's not enough to make a very strong case to short right now. We need to see some of these, like Microsoft, fail that breakout, meaning move back down below 228. And then, even better, that trend line that's comparable to that trend line on Apple, which so far they came in and defended. It's right there. That's it. So those are the levels I'm watching, and I don't know. I don't think we're going to have a definitive answer today whether yesterday or Friday's breakout was a false breakout or not. I think it'll probably, I'll tell you right now, the safe bet's to wait until Wednesday. That'll be once Amazon and Alphabet have reported. We'll have an idea where they're going to go. All right, guys, let's wrap it up here, and I can get the video out to you guys, I think, before the close. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.